Before we dive in, hit subscribe so you don't miss new episodes. If you find value, click the like button so we reach more people. Let's get started. Okay, we're taking a look at some pretty interesting stuff today, diving into a very specific part of finance, jet equity release.
For private aircraft owners.
Exactly. And our mission really is just to get our heads around what it is, how it actually works, and maybe most importantly, why someone who owns a jet would even use it.
Yeah, it's interesting because it really highlights this core idea in finance, using your assets to unlock potential. So based on the material, jet equity release is, well, it's a form of asset-based lending. Simple as that, really.
Right.
You take the jet's market value, the plane you already own, and use that as collateral for a loan.
So you're using the jet itself to get the funds, not selling it, not using like property or company stock.
Precisely.
And the material says the loan amount is tied to the jet's market value. But here's the bit that really stood out to me. The owner keeps the plane.
Yes. That's crucial.
They borrow against it, but they still own it, still fly it.
Exactly. And that rolls right into the main advantages we saw listed. The big one seems to be incredibly fast access to capital.
Speed, yeah.
If someone needs serious money, maybe millions, and needs it now, well, leveraging an asset like a jet can be much quicker than other routes. Think selling shares or even traditional bank loans sometimes.
Makes sense. Selling something like a jet takes time. You need the right buyer, market conditions. So this non-sale solution, as the source calls it, is a big deal. You get the cash without losing the asset. An asset probably pretty important for your business or travel.
And that ties into another point, minimizing disruption. If that jet is key for your operations, you can't afford for it to be unavailable.
Right. Downtime costs money. Big money, probably.
Equity release avoids that. Plus, the source mentioned flexible loan terms, too. Short-term, long-term, kind of tailored to what the owner needs.
Okay, so let's walk through the how. How does it actually happen? The process sounds pretty streamlined in the material. Starts with figuring out what the jet's worth.
Yeah, a proper valuation, probably by specialists who really know aircraft values.
Okay.
Once you have that number, the lender makes an offer. Usually it's a percentage of that value, the LTV, loan to value.
Right.
Then paperwork happens. A lien is placed on the aircraft as security. But again, the owner keeps operating it just like before.
The examples in the material really help me grasp this, like the tech CEO needing cash for an acquisition.
Yeah, that was a good one.
Instead of selling company stock, maybe diluting their ownership or digging into savings, they use the jet's equity.
Right. So they got the funds for a strategic move, buying another company, without messing up their existing investments or ownership structure. Used one asset to get another. Smart.
And the other one, the company with a whole fleet of jets needing $5 million, fast, for a merger.
That shows the scale. $5 million, pretty much on demand.
And they kept all their planes flying. The material said they lined up the loan repayments with the money they expected to make from the merger.
Yeah, so it wasn't just a loan. It was part of their bigger financial picture for the merger. It shows how it fits into corporate strategy. Avoid selling off essential operational assets.
So look, you listening might be thinking, okay, jets, interesting, but I don't have one. Fair enough. But why this matters, I think, is less about the jet itself and more about the idea. How you can take high-value assets, things that aren't easy to just sell tomorrow, and use them creatively.
Use them to get liquidity.
Yeah.
Cash.
Exactly. To grab opportunities, whether that's business or personal. It just highlights these specific financial tools out there and maybe makes you think differently about what an asset can do besides just sit there or be used.
Yeah, it definitely broadens the perspective, which leads to maybe a final thought for you to chew on. If something like a private jet can be used this way, leveraged for cash, for new opportunities, what other kinds of valuable assets could be looked at like that? Not just for what they are or what they do, but for their hidden potential to generate capital for something new.
Interesting question. Something to think about. Thanks for listening. If this helped or made you think, hit like it shows this content matters, and tap subscribe if you haven't yet. See you next time.